Hey everyone, I'm Charting Man Dan with the Chart Guys. We're going to check in on the markets in this video, and we're going to see that the bears failed to confirm the hourly downtrend in the Nasdaq, which was the next check mark. The bulls are keeping bull flag possibilities alive. Let's check in. So the S&P 500 futures chart is still holding daily EMA 12. Again, the simple statement is as long as bulls hold this daily high or low, there is nothing to worry about. And that level again is 453.34. We came close to it yesterday. The bears got my attention. We got down within $1 of that support, but zero bear follow through with some bullish reaction pre-market to some data. But we've been trading within this range now for the S&P 500 for over 2 weeks. It's a fairly tight range, and we're going to be looking for that to break real soon. If not tomorrow, probably on Monday. And again, just there's, what have the bears accomplished on this chart since the bottom? The answer is absolutely nothing. We had this big bear candle, zero follow through, solid bear candle, zero follow through, and now this one, zero follow through. So here we are testing the highs, second highest close for SPY in many months. The Nasdaq, so again, the checklist yesterday, we confirmed the 5-minute downtrend. We confirmed the 15-minute downtrend. We went into today saying, we need to confirm the hourly downtrend to confirm the daily downtrend. Those are the next two check marks that the bears needed to see. And because we started this morning with that pre-market bounce, already it was, this is not ideal for the bears. Once you go 50% plus retracement, at that point, the bears are just hoping for an equilibrium. And so pre-market, before the bell even rang, we're 50% plus retracement, getting back half of yesterday's drop. And so again, at that point, the ability to confirm the downtrend after you bounce 50% retracement is that much more difficult. It's not the most likely scenario anymore. And then the bulls just kept chugging along all day and really strong. And so we look at the Nasdaq, and the Nasdaq is a 12-hour equilibrium. Technically, we broke resistance, but no follow through. See that resistance there, that double top, we got over it here, but this stood out to me this morning just as a high, low, double top, higher, low, and was watching for this to tighten up, but bulls got up to resistance. So again, we're just knocking on the door of this bull flag, and a little bit of a fake out yesterday because again, the bears had some nice control. We closed really weak, but completely erased in many places. So we are knocking on the door of a weekly bull flag for the Nasdaq. And again, the close today of 390.43 is the highest close that we've seen on QQQ this entire move. No, this one was higher by a few pennies. Second highest close this entire move. So bears unable to follow through is certainly the theme of the last 5 weeks of trading. And with the Nasdaq, got to give a big shout out to Mark. So I put out a video, I guess it was 2 days ago, whenever it was, and I talked about a lot of concepts. And Mark made slides and helped him visualize what I was saying. Remember, I was talking about you got semiconductors and big tech over here. You got these sectors over here. I was talking about how Apple is your lead bull general. And I was talking about the pairings of Google and Meta and Amazon and Apple. And so he utilized this information by first making a nice visual slide, some pals, Apple and Amazon, Google and Meta, certain tech names correlate well together. And he used that information today. So today, Google had news pre-market, and it was gapping up in a big way while Meta was doing nothing. And so he used that information to shift the probabilities in his favor ever so slightly. If Google's breaking out in a huge way, I'm going to look for Meta to try and follow suit. So Google had news after hours yesterday, and it got bumped up pre-market due to Nasdaq strength. So Google's got a key resistance test in play, 139.42. That's worth watching in the short term, but again, it was up 5% today, and it started the morning significantly up. Meta started the morning at the low of yesterday and then just shot up first thing with a big 5-minute candle. 15 minutes just straight up. And so again, my Meta swing position, back to the same thing I talked about with CCJ last week where, if you asked me yesterday, what's the probability that you're going to stop out of this Meta long position? I would have said 88% chance I'm stopping out. But I've got to let the trade play out. I'm just going to stick my stop. And that's why the power of getting risk-free is so powerful, because I don't have to worry about losing money. I'm just going to let it play out. And so sold a little bit yesterday morning, but now my break-even stop is under here. And after the big day today, I'm just going to say that's either the weekly high or low, or I stop out and don't lose anything. And when I say risk-free, there's a tiny asterisk there because, again, if there's overnight news, there's always the possibility of a gap down. Only the day trades are risk-free because there's no gaps during day trading, but we'll say very low risk. But we need to see the meta bulls follow through here. Again, what's our retracement size? What if we bounced from the drop? We'll go from the high, 50% bounce retracement. Good. Now we're starting to get some progress for the possibility that when this move tops out, that we can confirm a hour or a daily uptrend to set the weekly high or low. And so there's enough of a chance that the Nasdaq's a weekly bull flag heading towards all-time highs that I'm going to let this long play out. And I also talked about, I like positioning in both directions. I do this with my day trading, and I'm now doing it with my swing trading. And the mindset is, if I can get a risk-free long in this position and a risk-free short in this position, probabilities are that one's probably going to stop out and the other is going to play out. And so I now have a risk-free short in XLV, I have a risk-free short of XLF, and I have a risk-free long of Meta. That's my swing trading for the week. And I'm good at the initial entries due to my day trading skills. The reason I entered XLV bearish yesterday was this hourly rising wedge that confirmed first thing on the morning with a nice 0.5% drop. I sell a third of my position into that weakness, and now my break even, it's not officially break even. It would still be a small red loss if we break over this high, but it's a very insignificant amount. And so again, I can position and just let them play out. And so if the bulls keep control of the broader market, I will stop out of FAZ for the financial sector. I'll stop out of XLV. My meta position will keep going up, and my long-weighted IRA will keep going up. And so that is one of the ways that I'm going to be increasing my swing trading activity, as I already have this year, but even more so next year. And again, it's being good at day trading to be able to recognize these short-term moves and then positioning risk-free so the longer-term move could potentially play out. That's just my mindset. And again, just going back to Microsoft, this is the longest position that I've ever held aside from a long-term no-touch position, and it was the same mindset. Back here, get risk-free, stop under the low. I'm either going to stop out. At that point, we're in the height of the bear market still. I'm either going to stop out or this is going to be a long-term position. And I couldn't be more pleased with how it has performed. Now up, 70% or whatever it is. So there's a lot of power to getting risk-free and letting things play out. Semiconductors broke the high of yesterday. And for once, it is not NVDA leading. NVDA daily inside bar, solid day. But I like the 4-hour here for clarity. Just a clear tightening range. If we fail 473.87 tomorrow, we will have a lower high and an equilibrium to be watching into probably first thing next week. So clarity on the NVDA 4-hour, but the majority of SMH strength was AMD today. Monster breakout move on some headlines. So nice for the semiconductors to be getting help elsewhere. It's usually the NVDA show. But now we're testing 132.83 on AMD, and if we get over that level, then we're at the highest price that we've seen in almost 2 years. Tesla tightening up. This can definitely break either way. Viewing it as a high, low, lower high, and now trying a higher low. Again, let's see if the 4-hour is giving us any clarity. Nah, we'll stick to the daily. I don't like it as much. And just these little daily higher lows. We got the base at 231, and if we break 244 tomorrow, then our new daily higher low is 237. So just watching this tightening range, because the tighter we get, the more we know volatility is incoming. What was this chart supposed to be? XLV. So again, XLV still looks fine. We held daily support. As a bear, I wanted to see 131 break. 131.09 was support. We held it by 16 cents. So still hanging on right near that high on XLV. And again, I will either stop out or we'll see weakness tomorrow. Going to let it play out. XLF, still possibly a daily bull flag. Big bear day yesterday, no follow through. Just an inside bar. Simple statement, if daily EMA 12 is support, the bulls keep their control. Same thing as the S&P 500. IWM, still strong. A little bit of bear follow through, but again, just looking for a higher low, trying to keep the daily uptrend, watching EM812 support. Our other laggard sectors, biotech sector hit new highs, airliners hit new highs. ARKK is trying for a daily bull flag. And solar still really struggling. Cannabis, MSOS. Just want to talk about, number one, we got 766 resistance still, but just want to talk about, even if you don't follow this sector, establish a game plan for a potential headline. We're anticipating a headline could come any day for the rescheduling of cannabis to Schedule 3. If that happens, I will market buy this sector and look for some significant short-term gains on a short squeeze and euphoria and hype. And so it's just something to be watching for. Set a volume alert, set an alert, watching the DEA website. They just updated fentanyl getting moved up to Schedule 1. So they update, I think, every morning at 8:45. So if anything's going to happen, again, it's the kind of news that you want to act quick on, because we will halt to the upside when that news drops. Otherwise, in the absence of news, again, we're just looking for a long-term tightening equilibrium into next year. But I will continue to focus significantly on this sector because, again, just the opportunities. That last bull move here, was a month or a 2-month maker. So just these little quick moves can certainly be worthwhile. Coin. So the crypto stocks, Bitcoin hit first hourly oversold back burner and is trying to bounce from that. And these crypto stocks also, this one was in extended hours. It's not the same for me. I don't treat it the same, but hourly oversold in extended hours did result in bounces on Coin and Riot. And if these bulls can confirm hourly uptrends, these daily charts stay really strong. So tomorrow, we're watching, can the hourly uptrend confirm on Riot and Coin? MARA is still strong. Can it regain the hourly uptrend? It's still hanging out in a potential daily bull flag. So keeping an eye out for continued strength in crypto. You can see this is where we get rotation when Bitcoin starts consolidating and then the altcoins start taking over for the bulls. And so that is the case today. The dollar. So the dollar has daily consolidation underway, and the bulls are going to be trying to confirm the inverse head and shoulders. Simple statement. If we confirm the inverse head and shoulders, the probability of a weekly bear flag decreases significantly unless we do what oil did, which is confirm the inverse head and shoulders straight into a drop. So bears really need to step up here, because if this dollar move gets followed through, the metals are not positioned well. Gold tried to get a bounce going today. It's a weak bounce. Silver hitting fresh lows. Again, that's a blow off top. And we're scouting daily lower highs on the metals. We're going to scout daily lower highs on the miners. They still need that dollar weakness to help recover from the blow off top to start this week. Oil still all bears. Daily stair step drop. We'll look for a bounce here shortly. Again, it's all about 64, 65 long term now. But the energy sector is still a lead bear. It's the weakest sector that I'm watching. And still an hourly downtrend there. Still keeping an eye on the utilities, potential daily rising wedge. I don't trade utilities much at all, but we'll see if that shapes up. Also, KRE, regional banks. 50% plus bounce retracement. So there were some people that I was interacting with talking about trading that when this pullback started talked about we're heading to the lows by the end of the year. And I said, measured the retracement, said, no, I'll take that bet. We're going to set the most likely scenario as a higher low after the size of that bounce retracement. Now we have the higher low and we're testing resistance, trying to confirm a monthly uptrend to put in that longer term bottom. So long story short, bears got our attention, got my attention yesterday, did some positioning. Fortunately, the positioning worked out where the healthcare sector did drop down and allowed for some maneuvering, but the bears failed follow through. And so going to stick with Team Bull if SPY has that daily support and if the bears can't follow through. So we'll see what we get tomorrow with some more pre-market data. Burden on bears to break these short-term daily supports. I hope you're well. do good things. I've got no videos here to end it, so just do a good thing. Just go do a real good thing. Like, do it. Don't just nod and say, yeah. You do the thing. Do the good thing.